Live from London, this is Bloomberg Daybreak Europe. I'm Tom McKenzie with your top stories. Stocks bounce back after a tech-led sell-off as traders trim bets on Fed rate hikes after a frosty US jobs report. President Trump vows to push ahead with his bid to remove Fed Governor Lisa Cook. We reveal his allies are actively exploring ways to install Trump candidates in order to reshape the US central bank. And Bloomberg learns that some European countries have accepted that ships transiting the Strait of Hormuz will now have to pay fees to Iran and Oman. Let's get to the markets then. Quite the turnaround in the Asian session with the Kospi in focus. Very strong gains there. Across the benchmark in Asia, you're seeing upside right now of 1.8%. European futures pointing to gains of 0.4% after record highs on European stocks yesterday with gains of more than 1%. Nasdaq 100 futures pointing to upside of 0.9%. Of course, it's a holiday in the US today, but the futures picture for the reopen on Monday pointing to a solid session after the S&P ended flat with chip stocks again in the US under pressure. That narrative, though, seeming to shift in today's session. Let's flip the board and check in on some of the other asset classes with a focus, of course, continuing on the yen. Some relief then for the yen and for gold on the back of a weaker jobs number and a push out in trader expectations for the next Fed rate hike to October. Currently, Brent crude up 0.6%, $72 a barrel there. The Japanese yen currently largely unchanged. We've been hearing from the finance minister as well. 161 right now on a volatile week for the Japanese currency, but stability in the session today. Gold gaining then on expectations of less hiking from the Fed, 135, more than 1% gain right now for the yellow metal, above 4,000 and closing in on 4,200. Let's check in on the risk events for this Friday then. 7:45 a.m. UK time, we'll get French industrial production data, so giving some more details and more colour on the strength of the French economy. And from 8:15 a.m. UK time, we'll get European final June PMI data. 9:30 a.m. UK time, the BOE Decision Makers Panel Survey, as we think about next steps for the Bank of England as well. So happy Friday. Stocks in Asia are rebounding after a tech-led sell-off. Let's get an update with Avril Hong standing by in Singapore. Avril, what has happened? Where is your focus?
The focus is on this rebound that we're seeing intraday and on tech. I mean, it's quite remarkable. We went from losses to where we are now on the Kospi, and this is following on from 2 sessions of declines. I think maybe this speaks to there's some bottom fishing among Asia investors at a time where also maybe investors are taking this glass half full approach as they assess the US jobs report, because it's not just tech that is on the way up. You look at every sector on the MSCI Asia Pacific, also in the green, flip the board. Just raking through what we're seeing in some of the big movers today to give you a sense of the volatility as well. Samsung, SK Hynix, they were both at points in the session seeing red, and look at how things have popped. Almost 9% on these memory makers. It really speaks to, I think, also the volatility that's coming from these leveraged ETFs, and also on the likes of Kioxia, right? Declines earlier, flipped to green now on the back of reporting that they have shipped their next-gen chips, samples at least, which gives you a sense also that as this AI debate rages on in the second half of the year, after what was a really good first half, traders maybe need to, work extra hard to keep on top of the incremental changes when it comes to the trade as it evolves. Now, flip the board again. As things are volatile, certainly we saw that also when it came to the Japanese yen. Some reprieve following on from the US jobs report, but we are also maybe bracing for some holiday intervention on a day where the Korea won is still on the back foot. And very interesting to keep track of this as well, because on Monday, the Korea won will start trading 24/7. So that's what we're seeing in the region today. Tom?
Okay, Avril Hong, in Singapore. Thank you very much indeed. Yeah, broader dollar weakness as well, a lift there for some of those EM and Asian currencies. As Avril was saying, Bloomberg Dollar Index right now down 0.1%. And tying that, of course, to what was happening on the jobs front, weaker than expected jobs data out of the US, then challenging expectations that the Fed will raise interest rates this year. Non-farm payrolls rose 57,000 last month, well below estimates. Kevin Hassett, director of the White House National Economic Council, says the picture is still positive.
I think this is a really strong, healthy job market, and that this was a little bit on the other side of expectation, but the trend over 3 or 4 months is consistent with our view that, again, that we were growing about 3% and that we're going to have a better second half of the year as those factories turn on the lights.
Let's bring in Paul Dobson, Bloomberg's executive editor for Asia markets. Paul, walk us through the market reaction to this data. Bad news, good news for the markets?
Yeah, good news for the market. Probably not as good as Kevin Hassett is expressing it in terms of the economy. And that's why the markets like it so much, because it takes that pressure off the Federal Reserve to raise interest rates anytime fast. Remember when Kevin Warsh came into his role as Fed chairman, he set out his stall very early. We want to get inflation back under control, bring it back down to target. The market already started to do the work for him, bringing down the inflation expectations in the market. Now this plays into his hands because it suggests that he won't actually need to go ahead raising interest rates, not with any urgency at the very least, in order to convince the market that inflation is coming back down. So what we saw is lower US yields, the pricing for a Fed hike this month down to 20%, the market not really expecting that to be a necessity anymore, and a weaker dollar. And that sort of followed through a little bit again into Asia's markets today too.
I wonder, Paul, to what extent that is the upside, that is the catalyst for the Asian gains that we're seeing. I mean, particularly in the Kospi, to what extent relief on rates out of the US is a catalyst for Asia?
It's definitely helpful, Tom. It certainly took a little bit of pressure off things, although, as Avril was explaining when we started the day, it was certainly wobbly, so it wasn't clear-cut, okay, here we go again. The market's taken a little bit of time to find its confidence. It was a really ugly session for Asia yesterday. It was the worst day for SK Hynix since November 2008. Today, as you've seen, like a massive rebound again. So it's just extremely volatile when it comes to those technology companies, and particularly in South Korea. But I do think that the market will take heart from it, both on the stock side and also on the currency side. You know, a little bit less pressure on the yen, a little bit less pressure on the won. For in terms of depreciation, with that dollar coming down, and that should be helpful for global risk appetite in general.
Paul Dobson, thank you very much indeed, Bloomberg's executive editor for Asia markets. Meanwhile, Bloomberg understands that US President Donald Trump and his allies are renewing a push to reshape the Federal Reserve. Top officials have been actively exploring ways to remove Fed governors to clear the way for the president's own picks. The Supreme Court blocking an attempt, of course, to fire Governor Lisa Cook, but she is still a target.
Get her off.
How would you do it at this point?
By winning the case. They sent it back, not based on the merits, they sent it back on process and procedure. So we'll start the process and we'll do perfect process and perfect procedure.
Let's bring in Bloomberg senior editor Balash Pensen with the details. Balash, what is driving Trump here? He's not giving up in his efforts to oust Cook then from the Fed.
Well, what's driving him, Tom, has been pretty clear since he came into office. He wants lower rates. And I think the biggest takeaway from this story, this excellent reporting from our colleagues in the U.S., is that if you thought that the political pressure on the Fed would abate with this Supreme Court decision and with the changeover in the leadership with Kevin Warsh coming in, think again. There will be more noise, more political pressure on the Fed. The White House, Trump and his allies are looking for ways they can influence the Fed. They can remold, change the leadership there. They will keep going after Lisa Cook. They will keep going after Jay Powell. They will try to install people who are more amenable to the way they see the economy and more likely to follow their policy preferences. So the biggest takeaway here is that there will be more pressure on the Fed from the White House.
Do we have any details in this reporting, any insights into who Trump's potential candidates are then for the future of this Fed?
We don't have names, but we have some ideas about the type of people they might target. So one area that they're looking at is these regional Feds where they are looking for new candidates. The Atlanta Fed vacancy being the most imminent one. They're leaning on Secretary Bessent's network, and he's leading some of the search and tapping some of the people he has worked with to try to bring them into the fold. And we also heard that Kevin Warsh has a preference toward people coming from the world of business, some local leaders, some entrepreneurs who can help bring in perhaps a different perspective to the Fed. So as the search goes on, as the search expands, those are the types of people we are looking at here.
To what extent could this potentially, I mean, I guess we have to understand to what extent Fed Chair Kevin Warsh is on board with this. I mean, maybe Warsh just stays on the sidelines when it comes to this debate. Maybe he doesn't weigh in on this. But is there potential tension there?
Well, when Kevin Warsh was talking during the selection process, he sounded very much in lockstep with President Trump in terms of their preferences, in terms of his desire to bring rates lower. As we just heard, that might be becoming a little bit easier because of the way the U.S. economy is performing, or at least the risk of rate hikes has gone away. So as long as that's possible, I'm sure the two of them will get along just famously. But when it comes to central banks, it's often said that the institution itself shapes the leader as much as the other way around. And Fed chairmen do tend to be independent and do tend to be proud of the Fed's independence. So how much meddling, how much political influence he will be able to tolerate, that remains to be seen.
Balázs, thank you very much indeed. Balázs Pench with the details there on that continued pressure then on the Fed, in particular Lisa Cook and other governors, of course, from President Trump. Now, US futures are pointing higher, with the Nasdaq seen outperforming when markets return to trade on Monday. This after a Thursday session which saw chip stocks extend declines even as the Dow hit a fresh record. The SOX, the Philadelphia Semiconductors Index, down about 10%, a little over 10% in just 2 days. Obviously, the narrative has shifted somewhat in the Asian session, at least. Let's bring in Natalia Jefferich, Bloomberg US equities reporter, who I'm very pleased to say is joining us around the desk this morning. And Natalia, you look at the US equity space very closely. This is your forte. But there's some really interesting dynamics under the hood right now that we're seeing. Momentum has been so strong, but we've seen something of a rotation in the last few sessions in the US. Is that going to be sustained? What is driving that shift?
Yeah, so if we look at positioning, I think short term, especially when we look at tactical positioning across institutional investors, we see that exposure to momentum stocks have become so elevated and stretched. People are bullish on especially a long part of this basket, that when I spoke with sources, people keep telling me that people are just taking some profits ahead of July, August vacation time for many people. Hedge funds have posted really strong performance. So, for example, second quarter was the best quarter in history, according to Goldman Sachs Prime Brokerage data. Yes, they posted really huge returns, mainly global long-short hedge fund managers. Now, so we see this rotation. Momentum factor, if we look at FTW function on Bloomberg Terminal, which tracks all factors, momentum is the best performing factor. It's up by 28% year to date. Volatility factor is the worst performing. It's up by almost 6%. So yes, people are taking profits. And then the second part of that, when I look at data from hedge funds positioning, they started selling TMT stocks at a pretty, significant pace. I'm talking about June numbers, excuse me. So they sell TMT stocks and they rotate into cyclical stocks. So this is kind of, again, this rotation trade. And finally, of course, you guys, I'm sure, keep track of small caps. They really outperform the S&P 500. And this is AI infrastructure story, healthcare M&As, and investors were really short small cap stocks, so they covered positions. Very
interesting. And presumably a lower rates environment, or at least rates on hold, is good news for small caps. We'll see if that of course, continues. Some really interesting dynamics in terms of hyperscalers underperforming, for example, UK gilts as well. How does this all set us up then? The dynamics you're seeing, the shifts, at least the positioning from hedge funds for the second half?
Yeah, so it looks like maybe short term we may see some volatility as people rotate out of AI stocks, at least for maybe short term, but longer term, of course, everyone is bullish. Again, we'll look at earnings, BI stocks function on Bloomberg Terminal. We expect that for the second quarter, earnings for the S&P 500 will be at around 23%. It's again huge number. People are bullish, especially on technology stocks. And of course, we keep an eye on retail traders because they are one of the biggest driving forces for the U.S. stock market. I don't track European retail traders, but in the U.S.
Not as many of them.
Yeah, maybe everyone is buying U.S. stocks, but yes, households in the U.S. hold record cash balances. I'm citing data from Citadel Securities. Wow. So they still have money to deploy, and yes, they are really active. When I looked again at Citadel Securities data, May and June were record months for U.S. retail traders' activity. Volume in equity cash trading was about 65% higher versus 2025. So everyone is bullish. Again, they have more money to deploy.
Very interesting. Record cash on balance sheets for retail investors in the US. Really important insights. Natalia, thank you very much indeed. Of course, Bloomberg US equities reporter Natalia Kniechevich with the insights there. Still ahead, the pressure continues for private credit funds, meanwhile, as redemption requests pick up at some pace. We dig into that story with Aberdeen's Marianne Zangerl. That is later, but first, the price of peace. Are fees to cross the Strait of Hormuz now inevitable? More on our scoop next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, Bloomberg has learned that some leading European powers now accept that ships transiting the Strait of Hormuz will have to pay fees to Iran and Oman. The US and Gulf Arab countries continue to insist that Iran and Oman cannot impose charges of any kind for the Hormuz Strait. Let's get more from Bloomberg Horizons Middle East and Africa anchor Abir Abu Omar. Abir, why do some countries think that this is inevitable? We hear from the US consistently, particularly from the Secretary of State, Marco Rubio, there will be no fees imposed. So why European countries kind of resign to the idea that they will indeed have to face tolls and fees of some sort?
Good morning, Tom. Well, because Iran is adamant on that notion, despite the pushback that it's gotten from the United States, with, as you mentioned, Secretary of State Marco Rubio saying it is completely unacceptable that Iran would toll the Strait of Hormuz after the 60-day period. Well, now we're well into the negotiations, but once that is over in August. And the scoop that Bloomberg has, we reported yesterday that these EU nations and the Gulf Arab countries in the region seem to have succumbed to the fact that this might be just the new reality of how things are done once the MOU is signed and once, well, the MOU has been signed, once the permanent deal is reached between the United States and Iran. What we have heard from these EU officials is that they're asking Iran and Oman, which is the other partner in this mechanism, to just not discriminate against ships according to their nationalities. Gulf Arab countries are vehemently opposed to this notion of the Strait of Hormuz, where the majority of their shipments have been going through since over the past few decades. But behind closed doors, Tom, what we know is that they have even resigned to the fact that this might just be the new reality, because Iran, through multiple officials over the past few months, but certainly over the past few weeks, more adamantly has come across and said that it will toll the Strait of Hormuz, that there is just no question about whether it will do that or not, and that it will do it with or without the help of Oman. Now, Oman seems to be caught up in this because it controls the other side of the Strait of Hormuz. The Sultan of Oman had met with President Macron earlier in the week, and they both agreed that they should abide to maritime laws and that they should abide to the international waterway security. But then Iran seems to have suggested that it will do this again with or without the help of Oman. And so Oman is trying trying to be a mediator in all of this. But in a nutshell, these countries that have their shipments go through the Strait of Hormuz have just resigned themselves to the fact that we might be seeing a new paradigm of things being done in the Middle East and certainly in the waterway. And so they're studying how this could go forward going into the future, and essentially looking at other waterways that have these mechanisms playing in order.
Meanwhile, Abir, we're getting reports that Iran is struggling to find buyers for its oil after one of the biggest wins for Iran from the US, which is getting US permission, at least temporary, for a sanctions waiver to allow them to sell their oil on the international market. And yet they're struggling to find buyers. Why is that?
Yeah, so you saw a lot of Iranian officials coming across after this MOU signature and throughout the technical talks in Doha saying the oil sanctions have been lifted, the assets have been unblocked, and that was a win for Iran. But in reality, you're getting a lot of their oil barrels that have come across from the Hoard Island, the main export hub, stuck in the Strait of Hormuz. Multiple reasons for that. While the U.S. has removed those sanctions on Iran, a lot of countries, namely in the EU, still have their own existing sanctions. They can't buy Iranian oil. And then you have the story of the China demand on Iranian oil and the fact that a lot of these countries that haven't had access to oil from the Strait of Hormuz over the past 2 months or so have to seek their own inventory and have to look at other sources of getting these oil barrels. And so you're seeing a lot of this movement in the Strait of Hormuz of these oil barrels, specifically from Iran, being stuck. But Tom, just something to bear in mind here. We have about 15 million barrels of oil making their way not only through the Strait of Hormuz, but through other shipping methods right now. And that compares to about 20 million barrels per day before the start of this war. So you're seeing the numbers really coming up, ticking up there to what we saw pre-war levels, bringing the average oil estimate for the remainder of the year to $60 to $65 a barrel, according to Citi. That is the latest estimate we had this morning.
OK, Bloomberg's Abir Abu Amr in Dubai with that update for us. Abir, thank you. Coming up, we explore whether Cuba's economy, meanwhile, and its authoritarian government can survive the crippling US blockade that it currently faces. That is next. This is Bloomberg. The US campaign against Cuba has been ramped up under President Trump. Bloomberg Originals explores what it means.
What's coming next for Cuba? Capture and kill is still an option?
I just can't tell you that. We've got options all over the map.
Perhaps no other nation epitomizes Cold War politics more than Cuba.
When you look for a country that's, let's say, punched above its weight on a global stage, Cuba should be on the list.
Cuba and the United States, by default of their geography, have always had some kind of economic relationship. When we had prohibition in the United States, Cuba became a haven for American tourists.
Cuba is just 90 miles south of Florida. It's in the heart of the Caribbean. It's been seen as kind of a strategic platform for U.S. rivals.
The U.S. has had a broad trade embargo on Cuba since shortly after the revolution in the 1960s.
Cuba is ruled by a single party, the Cuban Communist Party, and it controls the legislature, controls the military, controls all facets of society.
Socialismo o muerte. But the socialist idealism that birthed Cuba has ground to a halt, literally running out of gas.
There is a dire jet fuel shortage in Cuba as the U.S. is moving to cut off the country's oil supply.
Crippling blackouts and a teetering economy have sparked unrest on the island.
We have an unprecedented degree of suffering on the island.
The Trump administration has taken a hard line.
Cuba has always posed a national security threat.
Tonight, the Justice Department unsealing an indictment against former Cuban President Raul Castro.
Will Castro actually face this prosecution?
The message the indictment sends to the Cuban government is that the U.S. is serious.
Amid the upheaval, many are looking for change, and some see opportunity.
Realmente me gustaría que Cuba pudiera realizarse.
2 million plus Cubans that live abroad. They have a genuine desire to see their country prosper and the people prosper and move forward into a different direction.
Live from London, this is Bloomberg Daybreak Europe. Happy Friday, everyone. I'm Tom Mackenzie with your top stories. Stocks bouncing back then after a tech-led sell-off as traders trim bets on Fed rate hikes after a frosty US jobs report. President Trump vows to push ahead with his bid to remove Fed Governor Lisa Cook. We reveal his allies are actively exploring ways to install Trump candidates in order to reshape the US central bank. And Bloomberg learns that some European countries have accepted that ships transiting the Strait of Hormuz will now have to pay fees to Iran and Oman. Let's get to the market action then, as we zero in on the upside coming through in Asia. Again, after the losses particularly focused on tech, semis and chips stateside, with the Nasdaq 100 closing lower. A big divergence, though, because the Dow Jones index closed at record highs. The Nasdaq 100 closed lower by 1.6%. The S&P was essentially flat. Across Asia right now, a turnaround in sentiment. Gains of 1.8% across the benchmark. A lot of strength coming through for the Kospi this morning. European stocks futures then positioned to build on record highs of yesterday, pointing high by 0.3%. A strong session for European stocks on Thursday, and further upside flagged today in the futures story. Nasdaq 100 futures looking to add 0.9%. It is a US holiday, of course. Markets returning on Monday. Let's flip the board and check in on the currency space and oil. The Japanese yen has been in focus. We've been hearing from the finance ministry, of course, as well. And given it is a national holiday, there is speculation that maybe there is some intervention at play, though dollar weakness is supporting the yen right now and other Asian FX. 161 right now on the Japanese currency. Oil is up 0.6% at $72 a barrel on Brent. And gold is also getting a lift on expectations that maybe the Fed will be on hold for longer than had been expected. 1% higher, 1.4% higher right now, and closing in on 4,200 per troy ounce for the yellow metal. Time now for our front page news, starting with the Wall Street Journal, which says this year's job market is shaping up to be surprisingly stable. That's after non-farm payrolls, of course, came in weaker than expected. Nonetheless, the paper says the June data was underwhelming. Today's job market is much less concerning, it says, than it was 6 months ago. The FT, meanwhile, is leading on Andy Burnham, likely to be the next UK Prime Minister, of course, saying he will be disciplined with the country's public finances and will stick with Labour's manifesto promises on tax. And El País over in Spain saying that Spain has rediscovered its magic against Austria in the World Cup with a 3-0 and very convincing win to go through to the round of 16, where they will face neighbours Portugal. You can get a roundup of the stories you need to know to get your day going in today's edition of Daybreak. Terminal subscribers can go to DAYB Go, DAYB Go on the terminal. Right, let's switch focus to what's happening more broadly in the markets, but also what's happening in private credit, because private credit managers are facing a relentless wave of redemption requests, with second quarter exit requests exceeding those of the prior quarter. With us this morning is Marianne Zangerl, Aberdeen's global head of multi-asset and alternative investment solutions. Marianne, we can ask you more broadly about what's happening in these markets, and we'll look ahead to the second half. But let's start on the private credit story, because Blue Owl and others, again, putting in place these blocks around redemption requests, very significant redemption requests. And so this story continues for private credit. Does this remain contained to the private credit space, or is there a broader risk from what we're seeing as investors try to pull funds from some of these vehicles?
It's great to be here and good to start with private credit, very topical. I think, what we've seen is a continuation of what we saw last quarter. You're seeing those redemption requests continue to remain high. But there's definitely a sense in the market that the gates are in place. They're being used. So this time around, we've seen everyone utilize those caps.
Which wasn't the case in the first quarter.
Which wasn't the case. So there was a little bit more uncertainty in that first quarter because some people did choose to pay above that 5%. This quarter, we haven't seen that.
And that's a healthy dynamic?
That is how these funds were intended to work and function, and that education around that functionality is playing out now. So whilst the redemptions still look high and there are still issues around liquidity, I do think that this is a bit more of a normalization of what we're seeing now.
Okay, so normalization, do you expect it to happen in Q3, Q4? Does it continue through to the end of the year? When does this start? When does this normalization get to a point where investors feel they've pulled enough, they've rebalanced enough?
Yeah.
I mean, there's lots of dynamics underplaying why you'd want to be moving funds out of some of these private credit vehicles, whether it's you're concerned about software or whether it's one of repositioning into other asset classes.
Yeah.
How do you see the story evolving, and do you, Am I right in thinking you don't think this poses a broader risk to the broader markets?
No, definitely not a broader risk to the markets. I think, what you've seen, it's largely been a US contained theme. We've seen a little bit of action in Europe, but not to the extent that we've seen in the US. And if you look at the Blue Owl figures, the biggest redemptions there are in their tech fund. And that is still a concern in the market, the softness around tech. And so you will continue to see pressures there. But a lot of the concerns around defaults, the loans that were written back in 2021, you've still got a little bit of time before they start to come up for maturity. So I do think that you'll continue to see redemption requests. But it will become a normal feature of that market, and my view is that we'll start to see it quieten down over the next few quarters.
Okay, so let's zoom out a little bit more to broadly what is happening in tech and how you think that story evolves in the second half, because we've seen hyperscalers underperforming and semiconductors perform very, very well, though even now the momentum trade around the chip stock story seems to be faltering. We've had a revival in the spirits today in South Korea, but after a pretty torrid session in the last 2 days in the US. How is this dynamic shifting? There's a broadening out, there's a rotation theme. Is the momentum trade ending as a factor for these markets? What is the dynamic that you think will be most prescient in the second half when it comes to tech?
So we think the rotation continues to happen. We think it's healthy. A little bit of correction in the market makes sense. The trades have become very concentrated. And we're seeing people pull out of the US and into Europe. We do think that will continue. But in the medium term, these stocks, the growth story behind that is solid and is supported. So whilst we'll see a bit more in the short term, in the longer term, that growth story holds up for us.
And the greater breadth benefits Europe. Europe is now, the Stock 600 has now just about year-to-date outperformed the S&P. Are we starting to see a revival of the optimism for European equities? Do European stocks provide some ballast in this rotation story?
Yes. It's interesting for Europe. We've had this conversation. It feels like, we had it just before the Iran war kicked off. There was that, rotation out of end of US exceptionalism. Is this the time? I mean, with the world, geopolitical story so uncertain, who knows what happens in a couple of weeks? But we do think that, this is a good time for European stocks.
How did you read the jobs data out of the US?
Look, I don't think it was as I can't remember the word you used earlier, but it wasn't as horrific.
Did I use the word horrific?
No,
but it was certainly weaker.
It was weaker.
So forecasts for about 110,000 thereabouts. We got 57,000. Yeah. But the unemployment rate's at 4.2, not 4.3.
Yes. So I think it's definitely a softer read through from that unemployment rate. We look through that given the fall in labour participation rate. We look at the 3-month rolling trend, and you saw that those numbers fell from 190 to 111,000. So, they're a big drop. But the jobs market is still adding jobs. So cooling and does take the pressure off the Fed in terms of that rate rise that people were worried about and going into the second half.
How much does it take the pressure off the Fed? Does it mean they stay on hold through the rest of this year? Does it mean we can rule out a rate hike from the Fed this year?
So our view going into this, even ahead of this, was that inflation would cool and there wouldn't be a rate hike through the rest of the year. Nothing in this report obviously changes that view. The market obviously has taken a slightly different view, and there were rate hikes priced in for this year. But
well, it reinforces your view.
It absolutely reinforces our view that we won't see anything happen this year.
Do we get cuts in 2027 from the Fed?
We do think that we get cuts, but 2027 is, 6 months out. So
6 months is a long time.
It's a long time in the very geopolitical crazy world that we have right now.
Yeah. Okay. When it comes to the geopolitics and we think about what's happening in Iran, lower oil prices, I think this ties us back to the Europe story. Expectations from some houses that we're going to get a glut in terms of the oil story. Oil prices down, $72 a barrel or so on Brent. How much of that can we price into the kind of the earnings story for Europe as a benefit, or are we still facing the lagged effect of higher oil during the conflict and what that's going to do to European margins when it comes to earnings?
Yeah, look, I think this is going to be positive for earnings in Europe.
And that comes through in the next quarter, or do we have to wait for another quarter for that to come through, the positive impact of low oil?
I don't think we've yet seen that impact flow through to equities, and we've seen it very quickly happen in the oil price market. So we're still waiting for that to play out. What I think is an interesting theme, though, is with commodities softening, you've seen the price of industrial metals come down, and we think in terms of the longer structural growth trend in that market, this is a good time to be thinking about that space with electricity demand, with AI. The demand for metals such as copper will continue from here.
Okay.
So we're less focused on sort of the energy price and buying that, and more focused on buying metals at low and
interesting. So a window is open up for industrial
we think
metals.
So, yeah.
Okay, really, really interesting. Thanks so much for coming in bright and early this Friday. Really appreciate it with your take on these markets and private credit as well. Marianne Zangerl, Global Head of Multi-Asset and Alternative Investment Solutions at Aberdeen. Now, some other corporate news for you today. QTS, the data center developer owned by Blackstone, is abandoning plans to build its portion of a huge data center in Virginia, handing victory to residents who have fought for years to topple the project. The planned site was on the edge of an historic Civil War battlefield, and sources say QTS executives decided that it wasn't worth pressing forward in court. President Trump says he believes Elon Musk will donate SpaceX stock to the Trump Accounts initiative for new investment accounts for children. Speaking in a CNBC interview, Trump said he congratulated Musk on the SpaceX IPO and that he has a good relationship with the tech trillionaire. And SoftBank and its telecom unit will start renting AI computing resources in the US using a growing pipeline of data centers to compete with the likes of CoreWeave and Nebius. SoftBank says the NeoCloud venture plans to supply data center capacity for large-scale AI model training and inference. It's joining a crowded field as concerns grow about potential overcapacity. Coming up fresh from Sintra, policymakers head to a gathering that's been dubbed the French Davos with slightly different temperatures. We are live in Aix-en-Provence next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, the Aix-en-Provence Economic Conference kicks off today in France as central bankers and business leaders convene in the midst of a mixed outlook for Europe's economies. The forum comes straight after the ECB Sintra, of course, and the gathering there, and offers further opportunity to hear from Europe's monetary policymakers. Let's get more from Caroline Conat, who is in Aix-en-Provence for us, on the ground for us, Caroline. What can we expect to be discussed? What is top of mind for those gathering at the forum in Aix right now?
Tom, this is the last conference in Aix-en-Provence before the presidential elections that are going to happen in April and May of next year. And this conference is often dubbed the French Davos because you've got all these executives from the CAC 40, all these ministers gathering here, discussing the outlook. And of course, what is on everybody's mind at the moment is France going to have a populist president next year? Is France going to have a far left or far right president in less than a year from now? The problem, of course, is that there is no clear successor at the moment to Emmanuel Macron, who cannot run again. And a few candidates who are officially declared already are actually here discussing in Aix-en-Provence today, such as Gabriel Attal and Edouard Philippe, both former prime ministers, both ambitioning to be this successor to Emmanuel Macron. And of course, another big issue here in Aix-en-Provence is the state of French public finances. We got the current Prime Minister, Sébastien Lecornu, who was doing the opening speech in Aix last night, and he warned again about the danger of not having a budget this fall for next year. And he warned again about the danger of not controlling the spiraling debt levels in France. In fact, debt has increased by more than 1.2 trillion euros under the decade of President President Macron. Just for this year, if I give you one very striking example, the debt servicing costs of France are going to reach 75 billion euros. That's more than doubled what it was just 5 years ago. But of course, at the moment, none of the potential candidates, none of the potential successors to Emmanuel Macron want to put debt and deficits at the center of their campaign, given what happened to the two former prime ministers, Michel Barnier and François Bayrou, who were both ousted over the past couple of years over their plans to try and cut the deficits and control these debt levels.
Yeah, those debt servicing costs, stunning numbers, to your point, Caroline. What is the current state of the French economy? What is the outlook? I mean, particularly in light of and on the back of this Middle Eastern energy shock that we've seen?
Of course, the war in Iran has been also impacting the French economy. We got actually negative French growth in the first quarter, minus 0.1%. However, there was some kind of positive news this week with the French inflation, the latest CPI number for June actually at 2%, which is the ECB target, down from 2.8% in May. So perhaps this energy shock is currently being absorbed, but there is still a lot of sectors in the French economy that are rising prices, and that is impacting, of course, consumption and consumer confidence. These are some of the topics we're going to discuss here, of course, in Aix-en-Provence, as long as the performance and perhaps the volatility we're going to see over the next few months. We know that French stocks have been underperforming over the past couple of years since President Macron called snap elections back in 2024. And over the next few months, a lot of executives here do expect the volatility, especially on French bonds, to increase as we approach, of course, these French presidential elections next spring. These are some of the topics that are going to be discussed here in Aix. We expect Christine Lagarde, the ECB president, to speak today. We expect the Bank of England governor, Andrew Bailey, also here. And we're going to speak to one new central banker, Emmanuel Moulin, who took over as the Bank of France governor last month. And this is going to be his first exclusive interview on Bloomberg TV today. Tune in at 10:40 UK, that's 11:40 CET here in Aix-en-Provence.
OK, excellent reporting for us. Caroline Cornell on the ground for us at Aix-en-Provence and that forum, of course. Coming up later from Aix, we have got that exclusive interview then with the new Bank of France Governor, Emmanuel Moulin, who joins Francine Lacqua for his first TV interview since taking office last month. That conversation at 10:20 a.m. UK time. Now, Japanese anime has become, it's quite the pivot, isn't it? Become a global entertainment powerhouse, attracting fans worldwide and billions of dollars in investment. Now, publishers are enlisting the country's trading houses to help tap an estimated $13 billion global market for licensed merchandise. Bloomberg's Marianne reports.
Japanese anime's recent popularity has been off the charts. The sector has become a multi-billion-dollar global pillar, powered by hits such as Demon Slayer and One Piece. In fact, Netflix has invested hundreds of millions of dollars into licensing and producing anime for its streaming service, where more than half of its subscribers have tuned in. While the content has become easily accessible, there's a surprising gap: merchandise. It's left a high-margin market untapped by license holders. Growth has largely come from the U.S. market. It's expected to help anime-related goods generate $24 billion in sales by 2033. But retailers say Japanese companies are slow in launching products. Supply chain complexities, bureaucratic delays, content rights holders' complicated ownership structures are all partly to blame. But the mood is changing. As streaming giants like Netflix and Crunchyroll move to seize this untapped market, Japanese companies are also joining in. Trading house Marubeni is one of them, 10% owned by Berkshire Hathaway just in May. They have joined forces with major publisher Shogakukan.
Our strength at Marubeni is that we have had for years the infrastructure in place for distributing and selling goods abroad. On the other hand, Shokugakan has the IP contents, and they keep creating them. So it's a win-win for both of us, and the reason for setting up this joint venture.
Founded in 2024, Magnet exports anime merchandise featuring titles such as Ranma 1/2 to Frieren Beyond Journey's End. It started shipments to the US in April. Marubeni is now setting its sights on the rest of the world.
We are aiming to expand this year to China, Taiwan, Hong Kong. We already have markets here, but we would like to expand further. After that, for this year, we have our aim set to Europe and the Middle East.
But it's not all smooth sailing. Evergreen titles such as Dragon Ball used to be enough to capture the zeitgeist, but now consumer tastes are growing increasingly niche. And with limited official licensed products, knockoffs remain popular.
Pirated goods are obviously a concern, especially with the increased use of AI. To fight the spread, we are trying to speed up the approval of official goods that will hopefully override the pirated ones.
Still, Marubeni is betting that demand for anime merchandise will continue to grow, and it's positioning itself to meet the hype. Marianne, Bloomberg, Tokyo.
Well, for more on the trends, stories and people shaping Japan, look out for Sherry's new monthly newsletter, Tokyo Dispatch, which launches on Monday. Subscribers can sign up at bloomberg.com/newsletters. Plenty more coming up. Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Let's run you through what we saw then on the jobs front yesterday with the non-farm payrolls, the jobs data out of the US coming in lower, far lower than the expectation. 57,000. The expectation, the forecast had been for around 100,000, 110,000 had been the numbers. We got 57,000, and we got revisions as well lower in the months prior, which suggests there is a bit of a cooling picture coming through for the labour market, and that saw traders pushing back expectations of a Fed hike. Talking of which, the expectations of a Fed hike in July are effectively dropping to zero. Markets and traders still pricing in about 30 basis points by the end of the year, but they are expecting not to come through until about October. And that provided some relief then to the equity markets, bonds and assets like gold. Let's flip the board and have a look at what's happening in tech, because the semi sold off again yesterday. Bit of revival in the Asian session, but the momentum trade is now in question. It's been so strong, starting to fade now. The opening trade is up next. This is Bloomberg.